they can't stop it, but they can delay it. And they delay it using this hammer, this club of regulation. And it's even crazier in that they're allowed, for some unknown reason to me, to rewrite the rules, right? You go into Kraken and you say, yeah, we said this wasn't a security, but now we're saying that by staking it and earning interest on it, you violated securities laws. How did we do that? You, the rule maker, said it's not a security, and then I take that not a security and I lend it to somebody and get paid for its use. How is that a security? It's not an orange grove. It doesn't meet the Howey test. Anyway, I digress.
Hey guys, welcome back to the channel. In today's video, we have Mark Yusko discussing the current market conditions and how they're eerily similar to March of 2009. Yusko breaks from the popular belief that inflation is solely caused by the Federal Reserve and attributes it to the effects of shutting down and restarting the economy. Mark believes that the Federal Reserve has been printing money for 96 years to deliberately diminish the value of the currency and contribute to wealth inequality. Mark sees the current state of the economy as a cause for concern. Although he sees current market conditions as heavily overbought, this could lead to short-term market weakness. Nevertheless, he believes the accumulation pressure will lead to a series of higher lows, keeping the stock and crypto markets in a range-bound state for some time. Let's get right into the latest interview with Mark Yusko as he gives his prediction for Bitcoin, crypto, and how inflation will affect the market in the next few months. Before we dive in, don't forget to hit the like button and subscribe to the channel if you enjoy the content we do here. Let's get right into the video.
It's well documented that there's a whole bunch of things that don't quite add up in that, look, Sam Bankman-Fried is the mastermind of nothing. He is not a genius. Nope. He is not the guy who created this, quote unquote, second largest. No, just not. He is not the mastermind of anything. He is a useful idiot for a much larger group, which I will contend comes from way up high, to try. And I use the word try because they can't win. Because the fourth line of the quote, then you win, we already won. Anyone who is in crypto, we have already won because we see the future. I will say that under Jay Clayton's leadership, I thought the SEC did an amazingly good job in crypto regulation. They were consistent, they were prudent, they didn't jump in and make rash decisions. They studied, consistently said, nope, Bitcoin, Ethereum, not securities. These other things we need to check and compare them to the Howey test. Everything they did was very consistent. Gary comes in. Now, how did Gary come in? Gary was a professor at MIT. He worked for Caroline William, whatever her last name is, Sam Bankman-Fried's ex-girlfriend's dad. And Gary, with no experience as a regulator, right? He worked at Goldman Sachs, but that doesn't make you an experienced regulator. It makes you a bankster, right? Part of the cabal. A small group of people who control something. Bottom line is the banksters have been in control. And look, Goldman people, ex-Goldman people run everything, right? They're prime ministers, they're the head of central banks. Okay, fine. So look, Gary gets the job. Now, is it a coincidence that he was appointed by the guy who was elected, who was funded, the largest donor to Joe Biden was Sam Bankman-Fried? How is that even possible? Like, aren't there campaign finance limits that limit how much you, oh wait, his mom created a tumbler that allows venture capitalists in Silicon Valley to skirt the campaign finance laws. Maybe that's a coincidence. Maybe, I don't know. Seems not like a coincidence to me. So Gary gets the job, and Gary's very silent for his first few months on the job. And then suddenly he starts doing enforcement actions. Like you said, I'm gonna use all tools. Okay, but isn't a positive approach to collaborate with the people in the industry and say, okay, here are the rules. and it doesn't appear that you're following those rules. So let's have a grace period for you to get in compliance with the rules. And if you don't, then I can do enforcement. Rather than just say, all right, there were no rules, but now we've set a rule. And so in the past, you violated that rule, but it didn't exist. It's like the politically incorrect. If a man says something in the forest, there's not a woman there to hear it. Is he still wrong? Right? So yeah.
Mark predicts that by the end of the year, inflation may be close to zero or negative, providing a tailwind for digital assets. Mark believes there isn't a strong catalyst for a recovery, and the current situation is a soft landing without a crash. However, there is no sign of a return to growth in the near future. Despite the bleak outlook, Mark remains optimistic about the future of decentralized, non-government controlled currencies such as Bitcoin and other crypto.
The spirit of collaboration would lead to a positive outcome, right? I mean, if you ask me to cooperate or collaborate, I will try to help. I mean, I'm actually grateful. We actually have that relationship with the team that came to us to do our audit with the SEC. We helped educate them. I spent lots of time walking them through. We're not investors in FTX. We had no investment in FTX. And so they're like, well, can you help us understand? I'm like, sure. And I spent hours. Technically, they didn't have any jurisdiction because I didn't have an investment there. But it's not in my best interest to make them angry. So helping in a spirit of collaboration is one thing, but there's a reason one of the board members of the SEC, I don't know if you're a board member or what the title is, directors, but Hester Pierce, she didn't abstain, she dissented.
Yep.
She dissented, right? She said, I disagree again with, my fellow, and he is the chairman, like he's the head, but she's a commissioner. So I disagree with my fellow commissioner that what he's doing is positive. And regulation through enforcement has always been less productive than regulation through collaboration. And so, I don't know, I will argue that perhaps it's possible that positive outcomes are not the desired goal.
Yusko voices his concerns about the recent trend of stock investments despite negative cash flows and earnings. Mark emphasizes the importance of stock investments being based on a discounted future stream of cash flows and earnings of business rather than on popular market trends. Yusko also draws comparisons between the current economy and the period from 1968 to 1982, where there was little economic growth and the stock market remained flat for 14 years. Mark predicts we'll see a similar outcome in the United States. What do you think about Mark Yusko's outlook for the current economy and where we're headed next? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.